everyone, welcome to Foxon Media Digital. My name's Amy and today I'm joined by Rachel Segal, who's Head of ESG at Pzena Investment Management. So welcome Rachel, it's great to have you on this channel.
Hi, thank you for having me.
Yeah, of course, you've spoken at both of our the Summit for Asset Management ESG events, both in London and New York recently. So it's great to have you on here just to put a little spotlight on you and find out about yourself and your company. So before we dive into some of the ESG themes, would you mind telling us a bit about yourself and your firm?
Sure, yeah. So, as you mentioned, I'm head of ESG at Pzena Investment Management. We are a deep value, long only equity firm. We manage around 55 or so billion in assets. And the way that we approach ESG is really from a fundamental integration perspective. So, looking at ESG issues bottom up, how do they affect the companies that we're looking to make investments in, whether from a risk or opportunity perspective. We also do have I would say, somewhat thematic climate strategy that is aligned to the principles of the Net Zero Asset Manager Initiative.
That's fantastic. Thank you for that introduction. Just to expand on that thematic investing strategy, then, could you tell us a bit more about how you go about this and what your research is currently showing this year as well?
Yeah, so I would say the way we think about some themes, shall we say, across our research, it's in a couple of different ways. So one way is the ESG team taking the lead on identifying key thematic priorities within the sort of general ESG umbrella that we think the research team would benefit from, maybe going into a little bit more depth, or taking sort of the issue first rather than always the company first. The analysts and the team are really thinking company specific, and then it's our job as the ESG team to think a little bit more macro, say what are the issues that may also affect the companies. And so we prioritize that research every quarter with a subset of the portfolio managers within the team to make sure that what we're suggesting as the ESG team is actually relevant to the investment insights that we need. And I would say in the last 6 months to a year, we've seen really two issues come to the forefront, and that's biodiversity and water. And I think we're still, to be perfectly candid, struggling with how to integrate those very specifically into the financial analysis that we do for the companies we're invested in, because right now they feel like very big nebulous topics. And how do you really make that tangible and relevant to the analysts? And that's what my team has been spending a lot of time on, is trying to figure out, okay, what are the levers of financial materiality within these broad sort of societal risks and issues? How do we make this relevant to the team? And so we've done a couple of deep dives into the portfolio, identifying companies of higher risk for both of those issues. And we're in the process of actually starting a bit of a thematic engagement initiative. So typically, we've really left engagement on ESG issues to the analysts covering the companies, because we do think they're best placed to know really what's going on, prioritize the key issues. However, some of these broader thematic issues that, as I said, we haven't quite figured out how they really become tangible to an individual company. There's an opportunity for the ESG team to actually take a bit of leadership there, have some initial conversations with the companies we own to figure out, well, how are they thinking about these issues? Less about, we're trying to tell you to do something differently, or we've identified that this is a massive risk for you, and we want to help you solve it. And it's more about just sharing knowledge, from companies that are obviously grappling with these same issues. How are they thinking about it? What have been maybe that some of their business priorities that have arisen from thinking about these maybe new and emerging issues. So that's kind of one piece of how we think about thematic. And then obviously, I did mention, and you alluded to, the sort of thematic strategy that we're running as it relates to climate change. And that's really been a specific initiative that we put together in support of the Net Zero Asset Manager Initiative, because of the belief that we have that the partnership between asset managers and asset owners to try to figure out this highly material climate question for many of the companies and industries that we're invested in, that partnership aspect that the NZAM, or the Net Zero Asset Manager Initiative, emphasizes, we think is very important. And so we thought, by joining this initiative, we would have a seat at the table with other experts, our peers in the industry, and also the asset owners with the capital to deploy, to figure out how we can move the needle, make sure that we're considering all of the financially material risks and opportunities for our investments. And so that strategy is run somewhat separately to the rest of our investment approaches, really with that lens of putting the portfolio on a pathway to net zero by 2050. And we're still in the process of figuring out exactly what our commitment to the NZAM initiative will look like, but having this strategy is sort of a great first step.
No, that's amazing. It sounds like it all aligns and is a very well set up system to engage both from the research side and, like you say, from the analyst side, working together. Because I think that's sometimes something that firms struggle with, getting all the teams to align when they have these insights. We often talk about a lack of data, and then what do you then do with that data? So have you got any case study examples of engagement efforts that you've had to work with the companies, whether it's you or the analysts themselves? And how also do you think this feeds into the debate about greenwashing? Because there's been a lot of talk this year about anti-greenwashing. And of course, if it is difficult to report on biodiversity, report on water resources, how do you go about navigating that when you're sort of, obtaining the data and, finding out the problems yourself?
Yeah, I think that's something we've been very focused on is really doing what we say we do and not trying to overstate the impact that we can have. And I do think it's a bit of a philosophical question to some extent in the public markets of how much of your individual engagement with any given company is actually changing the way that that company is behaving. Are you one of many voices? Are you one very significant voice? And it's, you know, it really depends on the context, and it depends obviously on what percent of shareholding you have, how your relationship is with the management, how many other managers may be advocating for the same issue. And so, I think we've always tried to frame our engagement efforts as, we want to build that relationship with the management teams. It's in our long-term interest, and obviously as a fiduciary for for our clients' long-term interest to advocate for the things that we're advocating for. But can we alone take all that credit? Probably not. But one of the things that we've created in the last couple of years is called our opportunity list, which we think is a way to really focus our engagement efforts and prioritize the reporting and disclosure evidencing to our clients, prioritize those resources within the team, because obviously it is very difficult to expect analysts who have a conversation with every company that we own to expect that every single conversation is documented, reported, etc., to the same degree. And so what we've done is by creating this opportunity list, we're saying within each of our portfolios there's a subset of companies for whom ESG is a more material driver of potential future performance. And so we are going to focus our engagement resources and documentation efforts on that subset of companies. And you can think of it as maybe today they might be exposed to more ESG risk. But in the future, we think that remediation of those issues, probably has a good potential to contribute to, earnings recovery, et cetera. So that's how we've been thinking about, I would say, our documentation of engagement. Obviously, we continue to engage with all the companies that we own as needed. Sometimes there's no ESG issues for a company, and therefore we're not having ESG focused engagements. But oftentimes there's something that could fall, under the wide umbrella of ES or G, and obviously the G being maybe the one where there's sort of a catch-all for a lot of issues. And so we we have this subset of companies that we think, okay, we really need to have a subset of milestones and objectives that we expect to see this company making progress towards over the time that we're invested in the stock. If we don't see that progress, then we will escalate our engagement, use different tools that we have, writing letters to the board, voting in proxies, etc. And then obviously, divestment is always a last resort, but we really don't like to even really suggest that, because it's sort of an abdication of responsibility. You're walking away rather than continuing to have a dialogue with the company. And so that's really only reserved for situations where we think that the investment thesis has just gone completely a different way to what we thought. But we don't tend to use it as a tool to say, okay, well, we're going to divest to try to pressure this company to do XYZ. If we're pressuring a company to do something, we're very much at the table with them as a partner, trying to figure out how to address some of these business challenges. But I think it's important to have the reporting and the disclosure for the credibility in the industry, and we've really learned that through engaging with our own clients around their priorities. If it's very important for them to see evidence of how managers are approaching these issues, and that's really why this opportunity list has been very helpful to us, because it has enabled us to provide them with what they need without creating an unrealistic reporting expectation for the wider investment team.
No, that's fantastic. And I know we've got a lot of regulatory updates coming out this year, like the TNFD and SFTR, SDR, a million and one that have been mentioned to me, from the ISSB and so on. So have any of those shaped that strategy, or is that something that you kind of felt was needed anyway? And it's more that, these regulations perhaps complement the push for added better reporting?
Yeah, I would say very much a compliment. We've been on our own journey with our clients to figure out what they need from us with respect to ESG reporting, and we certainly know more news is good news for ESG. The more that you're able to share with the market, the better. Maybe that's not always the case with other aspects of the investment industry. We don't necessarily have clients asking us for our investment thesis on lots of companies, but certainly the ESG piece of that is very important to them. And so we sort of see it, we have to handle the ESG piece of what we do a little bit differently from an external reporting transparency perspective. I would say we are following the developments very closely of things like the TNFD. I mentioned obviously earlier biodiversity being an area that we've started to focus on. I would say, we've to my earlier comments, how we're not sure exactly how it translates into our investment process. We're in a sort of wait and see mode. We've analyzed and then looked at the sort of draft reporting guidelines. We're going to wait until the final ones come out to decide if maybe it's appropriate for us to put together a mini TNFD type report, if it's something that has become increasingly relevant in our investments. We have actually already on our website a TCFD aligned climate approach document, which we felt was very important given the obviously heightened focus on the issue of climate change, also our own climate strategy to put together something that really outlines how we think about that issue in our investments. And it has become very material in a number of those companies that we own. And so to the extent that biodiversity follows the same path, we are very supportive of the sort of TCFD, which has now been adopted by TNFD type approach. The kind of pillars of reporting we do find to be very helpful and relevant. And so I could see us down the line taking a similar approach to the biodiversity issue as we have to climate.
No, that makes sense. And like you say, until things are published anyway, all you can do is get ahead as best as you can based on your own objectives and hope that it aligns well, and just keep an eye on it because it's constantly evolving anyway. And you touched on divestment there and your attitudes to that as well. And that's very relevant because, the past year things have been so volatile. There's so much happening in the world with the energy crisis and just the constant debate on the energy transition as a whole, supply chains, global instability. So how do you think that shaped the industry's attitude to divestment and the whole green versus brown investments? Do you think the conversation's changed there, given all these external factors that have kind of brought it to the table, or do you think that there's still that divide in the industry?
Yeah, I definitely think it's changed. I mean, when I started at Pzena, which was about 4.5 years ago, I felt like our narrative was very much around ESG improvement. As a deep value manager, we are looking at companies that may be today experiencing some pain that could have been caused by an ESG issue that became a risk to the business and affected earnings. And so therefore it's natural that in the course of our ownership, we're hoping for earnings recovery. And if ESG improvement can contribute to that, there's a sort of natural connection to alpha generation potential. And we'd done some proprietary research around that question, looking at the ESG scores and improvement in scores over time, and what that does to performance. And we do see incremental evidence to support our philosophical view that there is alpha to be generated in the ESG improvers, not just in the strong ESG performers. And I think in the last few years, we've seen that narrative suddenly become much more acceptable than perhaps it felt at the time when we started talking about it. And that's been very encouraging because I think we see there's obviously value and benefit in the market to have all different types of ESG investment strategies, and ESG improvers is one, but we do think it's a valid one and has gotten more credibility, I would say, in recent years. And I think some of those drivers that you were mentioning have definitely contributed to that. For us, I think the way that we think about the energy transition and the role that we can play is very much in that transition story. So as a value manager, we have been invested in sectors like energy, utilities, where there are large emitters, chemicals, steel, metals, mining, etc. And we do see that, you know, if we're going to get to a net zero by 2050 world or end state, we don't bring those companies along and have them decarbonize, then we're not going to be where we need to be. And they are playing critical roles in the economy, we need chemicals, we need steel, etc. And so to assume that you can build a portfolio that excludes all of that because they're just high emitters, we've always found to be somewhat problematic because we don't think it's really being very honest about the overall problem that we do have to fix. And so for us, picking companies that we think are actually on that transition path in a credible way where we're tracking against various milestones, objectives that they've laid out. In some cases, all the technology is not yet commercially viable for them to get to a net zero end state. But if we see that they're deploying capital in a smart way, thinking about the future, responding to the regulatory environment that they operate in a way that makes sense, then that's an investment that's very interesting to us. And so I think for us, we very much view even our own climate strategy as a transition story, not we are only buying companies that have today achieved net zero, which I think is very, very few, and certainly fairly much none in the industries that we're talking about. So I think it's just a philosophical question, and it's one where I think it's important to have investment opportunities across that spectrum for people who have different philosophical beliefs as to where they want to deploy their money. But certainly we do think that there is a space for what we do, and we've seen that become more interesting to people in the last couple of years.
Yeah, well said. I think, as you say, there's a space for all those different propositions, and you have to think about all the possibilities when looking long term and who's going to be on that journey. So I think it'll be very interesting how the conversation pans out between now and the end of the year. What with COP at the end of the year as well, and we've got ESG London taking place again in November. So I'm excited to see where this goes. Hopefully, in a good way. But thank you so much, Rachel, for joining, and obviously we're looking forward to having you at all our future events as well. So it's been great having you on the channel.
Thank you. Yes, it's been a pleasure.
Thanks everyone for watching. Don't forget to follow our YouTube channel for more content on challenges and opportunities in asset management, wealth management, and ESG. And don't forget to give this interview a thumbs up and hit the subscribe button.